Hey guys, hope you guys are doing well. Today is Saturday. Hope you guys had a great week. Um, Today we are looking at a closed-end fund. I haven't looked at one of these in a while, and this is a good one. I like this one, but there are some hitches here, and we'll go over that throughout the video. So if you're new here, please like, share, subscribe, do all that good stuff that I say in every single video. And down in the pinned comment down below are ways that you can support the channel. Of course, the biggest support is like, sharing, and subscribing. But if you're an Amazon shopper, there's an Amazon link. If you use that, they throw me a few pennies on qualified purchases. There's M1 Finance links and Ko-Fi links just to throw a few bones my way. But you know, all that's optional. Like, share, subscribe, comment down below is plenty for me. So let's just get into it. Okay, so what are we talking about today? We are not talking about BST, but we are a little bit, right? So BST, if you don't know, I did a review on this way back, and it was a pretty good buy at the time, and it's just ran up. It's ran up like crazy. And if you don't know about closed-end funds, the way they are priced is not the true value of what the fund holds. Okay, so an ETF is usually passively managed, and it follows an index, right? And they keep the price of the value of the fund very close to the share price that you buy it at. So if you're buying, DGRO at $50, you're probably only a penny off from what the value of all the fund's holdings are if they were to sell them all off at that time. Okay, so if the fund went kaput, you'd get your money back. I hope that makes sense. So you're paying almost the exact value at an ETF to what the holdings are. Does that make sense? I hope that does. In a closed-end fund, the share price and what's called the net asset value are on two separate planes. Okay. The net asset value is disconnected. So it is possible with a closed-end fund that you will either pay more or less than the value of the total assets held by the fund. Okay. So what does that mean? That means it's possible for you to buy, say, $50 worth of net asset value at $45 or $48 or something like that. But what's also true is that you can buy that $50 net asset value of the fund for $55. Okay, there's funds out there like that. So why would you overpay? You might believe in the managers of the fund. They might be outperforming. It might be worth it, right? They might be perpetually trading at a premium to their net asset value. Right? If they're good fund managers, they outperform. It could be an okay investment, right? But it's always nice to get a discount, right? I mean, we always want a discount. We always want to buy something cheaper than it's actually worth. That just makes a whole lot of sense, right? So BST, what it is, it's the BlackRock Science and Technology Trust. So a lot of high growth tech names, they sell covered calls on some of the positions to provide a dividend, and they also trade. So a lot of these closed-end funds have high turnover as well, if that's important to you. So we'll look at BlackRock Science and Technology Trust, BST. Now I just spent over an hour because look at this, is called a trust, right? Usually in a trust, they have expiration dates. Like, they expire at some point in time. There's usually a end date to it. But it took me forever. I looked through tons and tons and hundreds of pages of prospectus and filings and all kinds of stuff, and I couldn't find an end date. But what I could have just done is gone to BlackRock's website and read the first line in the description, which is BlackRock Science and Technology Trust is a perpetual closed-end equity fund. That would have saved me an hour or two. Perpetual means never ending. Okay. But currently, BST is trading for a share price of $58.65. It has a net asset value of $53.55. So if you were to buy today, you are paying 9.52% more than what the assets are worth that the fund holds. Okay. But what I'm going to share with you today is a second fund that BlackRock has opened. It's been been almost 2 years. And that is BSTZ. And that's the BlackRock Science and Technology Trust 2. They couldn't come up with a catchier name, but it's actually probably a good thing because BST has been an outperformer for many, many years. Very popular. And to attach itself to this and just put number 2 on it probably helped this grow. And it's grown. And it's grown even bigger than BST already. But if we look at BSTZ, it's trading at a share price currently of 37.78 cents. And its net asset value, look at that, is $40.04. So you're getting a 5.64% discount to the net asset value. So you're already essentially ahead of the game. But that being said, you also have to look at the averages. So the 52-week average, BSTZ typically trades for, on the average, typically trades for a 9% discount. So you're only getting a 5.5% discount at this point. But it also has traded as low as a 13.8% discount and as high as a 2.93% discount. So it's never traded at a premium. Okay, so you have to look at those and make judgment calls on whether you'd like it or not. So what is BSTZ? My looking this over, this is kind of similar. If you are familiar, I did a QQQ and a QQQJ review. This is similar to that. Remember, the QQQ is the NASDAQ 100 and the QQQJ is the next generation of NASDAQ 100 stocks, or the next 100 below. So this is sort of like that. Okay. So we'll just look it over here. We go to since inception. We'll look at this. It had a, like everything, had a dip in March, but it's been pretty much, up and to the right. It has a distribution rate, 5.43%. Monthly distributions. If we look at the fund basics, not a whole lot of information here. We'll get to that. It does have a 1.3% expense ratio. Most closed-end funds are very similar. I think BST is at 1%, so it's just a little bit more. Not very much leverage to speak of. And when I say leverage, usually closed-end funds, a lot of closed-end funds will borrow money to boost returns or to even fund the distribution. And we really don't have that going on here. 3.1 billion in assets at the moment. BST, I think, has 1.8 or something like that. So it's really grown since, I think it's June of 2019. And BST has been around since 2014. So it's already blown BST away in assets under management, basically. So we'll go over and we'll just take a look at BSTZ. Now here's one of those caveats that I said that's kind of a con. Remember I was talking about a trust? Well, BlackRock Science and Technology Trust is a limited term closed-end equity fund. They started in June of 2019 with the investment objectives of providing total return on income through a combination of current income, current gains, and long-term capital appreciation. So the main aspects of this fund seeks innovative growth in the technology sector, kind of like QQQJ, or actually really similar to the ARK funds. This is really kind of like an ARK fund, but with a fat dividend. So you have access to next generation and emerging companies leading in technological development. And a unique thing about this with closed-end funds, they're actively managed, and a lot of times they can kind of do what they want. They have a board of directors that can approve investments and different moves that they can make. There's a lot more flexibility in the investment managers than in an ETF, for instance. So right here, access to private market opportunities. So the fund seeks to invest up to 25% in private companies. So they're looking for the next big thing, right? So that could, have pockets of really high growth at times if they make the right investment choices. And at the end, seeks to reduce portfolio volatility. So it sells writes call options on underlying equity portfolio, potentially reducing the fund's volatility. Now, they don't write call options on everything. They look opportunistically to write those calls. So if we look at total return as of, let's go February 28, 2021, it already returned you 107.56%. Cumulative since inception, 109%. Why do they do that? 123.24% total return. Market price, 97.82. So you doubled your money in a year and a half with this thing already. And if we'll look at distributions, I know that's hard to see, but this is actually rare in a closed-end fund where you get increased dividends. BST has been doing it, and BSTZ has been doing it as well. So it started out, let's look at its better chart over here on distributions. We'll look at distributions since inception. It started out paying 10 cents, did that for about a year, and then it bumped it up in 2020 to 11.5, and it just recently bumped it all the way up to 17.1 cents. So, hard to argue with that, right? They are showing it as a lot of return of capital here, and that might be due to the covered calls. I'm not sure. But we'll go back to here. We'll look at some key facts if there's something I haven't gone over. Number of holdings, 126, so it's pretty diversified. Like I said, distribution of 5.3%. Percent overwritten as of November 30th. So overwritten, what this means is how much of the fund is written on covered calls. Not necessarily, this says 20.66%, but it's not necessarily 20% of the stock's holding. It just means 20% of the fund value. Okay, it could be on one stock, could be on 10, could be on 20. It's not about 20% of the portfolio. It's just 20% of the portfolio value. We'll go to the portfolio here and we'll look. Actually, there's a better one I wanted to show you over here. Private investments. This is the list of their private investments as of, I think this is as of December 31st. But Fixed Mobility, Klarna, you're not going to know any of these, right? most likely. Some might know C3.ai. There's probably one of their successful ones that they invested in privately. C3.ai had a public IPO very recently, so that changed to a public company, but they had 26 million invested in them, so they probably did very well on that investment. Arrival, looks like Arrival is going to go public too. They got 20 million in that. So this is just how the difference of this type of fund. It's not just in legacy companies like BST. There's some chance for some hyper growth here if they pick the right companies. So portfolio position, option activity, there you go, 21%. Portfolio positioning as of December 31st. During the period, we rotated our exposure in services and software companies, taking profit from strong performers and adding to attractively valued innovative opportunities in semiconductors and hardware. We continue to focus on companies that are exposed to long-term secular demand. So this is what's nice too. These reports, there's a ton of information. I'll leave the link down below to BlackRock and this one especially. Click on the literature button. There's a ton of, they're very transparent, and the reports are very, very good. They tell you what they're planning to do, what they've done, where they've made mistakes possibly, what they could have done differently. Very, very nice BlackRock management here. So we go to sector breakdown. Oh, look at the geographic breakdown. It's pretty interesting. 55.5% in the United States, and then spread all over the world. China 7%, Japan 4.5%, Korea 4.3%, Brazil 3.8%, the UK, Canada, Australia, Germany, France, Netherlands, Taiwan, other. I mean, they're everywhere. So we got the sector breakdown, mostly big one is internet and direct marketing, retail, content, infrastructure, services, software, other. They're not totally in small companies either. 50 billion and over is about 15%. 25 to 50 billion is over 20%. 10 to 25 billion is over 20%. Private holdings is over 20%. So really, really nice information that you can get from BlackRock, and that's really, really nice that they do that. I think that's it. I mean, you can go here and look at all their portfolio managers. Tony Kim, head of technology equity team, looks like a smart dude. He's got glasses, must be smart. Oh wait, where's my glasses? Here we go. But I don't ever wear my glasses anymore. So that might disqualify me. Kyle McClements, Christopher Acatella. What a cool name. Reed Mange. So, like I said, go down to the literature tab. Lots of annual reports. A good read here is the closed-end funds versus mutual funds. If you're not familiar, the commentary, which is this, very informative. I really, really enjoy it. So BSTZ, the next generation of BST. The cons: high expense ratio. It's not a perpetual fund. It has an expiration date, which is about 10 years away. They do have waiver or options to extend it. I think it's 18 months beyond the expiration. Let me see if I can show that. I forget where I read that. I probably won't be able to show you. I think it was here. Here it is. Oh, that's going to be hard to read. The trust currently intends to dissolve on or about January 29, 2032, provided that the Board of Trustees may vote to extend the dissolution date once for up to 1 year and once for up to an additional 6 months to a date up to and including 18 months after the initial dissolution date, which date shall then become the dissolution date. Each holder of common shares would be paid a prorated portion of the trust's net assets upon dissolution of the trust. The board may also vote to cause the trust to conduct a tender offer as of date within 12 months preceding the dissolution date to all common shareholders to purchase 100% of then outstanding common shares of the trust at a price equal to the NAV per common share on the expiration date. So, what does that mean? If they closed it, for instance, let's say it's 12 years from now, right? And we go here, if they closed it and your cost basis was 37.78 and the net asset value was 40.04, you'll receive 40.04 because you bought in at a 5.64% discount. So they'll distribute the net asset value, whatever that is, regardless of what your cost basis is. So if you paid higher though, if you paid the $45 for this, right, and they disbanded the shares, you'd only get $40. So that's something to think about, and that's the con, right? The fund just ending. Now, it does, if you look at it, the trust currently intends to dissolve. So they could turn this into a perpetual fund. They have a board of directors, they can vote, they can make that decision. But it's up in the air. So January 29, 2032 is, tentatively the expiration date of this fund. But it's definitely performing well. Definitely has a lot of assets under management. Definitely trading at a discount. So those are some pros, right? And it's managed by BlackRock, which is like the #1 asset manager in the world. So they've proven their worth with BST. I think BSTZ will follow suit, right? So let's take a look at, let's compare the BSTZ performance-wise for the past, I think it's year and a half. Let's look at it. 1.8 years. So BSTZ has been around since June 2019. BST beat it out slightly. BST returned 114.89% versus BSTZ's 105.89. So, there you go. BST's trading at a premium, but it's a perpetual, never-ending fund. Has had solid performance. Management is great. Legacy companies. Pretty much, there's no private investments in BST. It's just covered calls and trading. That's how they manufacture returns. BSTZ, it's newer, trades at a discount, has a higher expense ratio, and also has an expiration date. They both have been increasing their dividends. I don't expect that to be any different going forward, but time will tell. If we have a tech crash, then obviously it's going to hurt these funds. But I like them both. If I had to choose one or the other, because I'm a cheap dude, I would choose the one trading at a discount, which is BSTZ, but I probably won't because it has the expiration date. So since it has the expiration date, I would say BSTZ is best held in a retirement account, because when that time comes for them to disband the shares, the trust, you're going to be exposed to long-term capital gain tax, right? So in a retirement account, that doesn't matter, right? So if you held this in a taxable account, you could be, if you had a very large position in it, you could be exposed to a large capital gain distribution when the fund closes down. So know this went on long. I apologize. Let me know what you think. If you got any questions, leave them down below. Hopefully I didn't miss anything. I spent hours preparing for this one, reading through all that just because of that dang expiration date that I was looking for BST. But oh well, you win some, you lose some. Hope you guys enjoyed. Like, share, subscribe, do all that good stuff that I say in every single video. Check out the affiliate links if you would. I would appreciate it. You guys have a great weekend, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.